What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about one thing, one item, one commodity that is moving higher where there's not a lot of focus right now. And it's hit its highest level on the year and highest level since November of 2022. Now, if you guys checked out and watched my market update video, you guys know exactly what I'm talking about. But as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the alerts, all the members only private videos, and again, get access to fundamental tech analysis courses, options courses, 50 to 60% off, coupon code LABOR4 if you are interested in joining and taking advantage of that as well. So all links are going to be down below. So today we are talking about crude oil. Yes, energy prices, they have been skyrocketing and nobody's paying attention. We have literally gone from $65, low 60s to back over $85, $86 per barrel. And that is a pretty substantial increase in my opinion. By the way, these right here are the coupon code LABOR4 if you want to take advantage of the courses. But this right here is the increase of a little bit over 28, almost 30%. And this week alone, crude oil prices are up over 7.5%, and there is not, in my opinion, a lot of coverage. And as a result, energy stocks were higher. So you can take a look: Chevron, Occidental, Exxon, Shell, BP. We got Devon Energy, all of them very nicely green, and on the week also higher as well. Occidental was up 4.4%. BP was up a little bit over 5.5%. We got ExxonMobil pushing up over 4.87%. Not to mention Devon Energy up over almost 5%, with Chevron pushing up over to 3.26% as well. Now, this is a problem. It is a concern. Why? Because inflation, right? Inflation has been ticking back for core and for headline, not to mention energy prices on a month-over-month basis also ticked up. So year over year, we're now sitting at negative 12.5%, and energy prices were the big contributor to overall inflation coming down because of its substantial decline since June of last year. We've seen a 40% decline in energy prices. So if you come over to crude, you'll notice that we kind of peaked back in November of 2022. Actually, this is Chevron. Let me just go back to crude oil. You'll notice that we actually kind of peaked back in June of last year when we were trading as much as $123 a barrel, and we pretty much dropped about 48%. And guess what? This was reflected in the energy prices over here. This is the entire sell-off. But if we start moving back higher once again, well, guess what? We're going to start to go back into that positive territory, and that's not going to be great news for inflation because everything is tied to energy, right? When it comes to inflation, most things, most goods and services are transported on energy, and energy is needed. And if this starts to go up, the cost of those goods and services also starts to go up, which creates that ripple effect and also a big problem for overall inflation and of course for interest rates as well. This is the highest level that we are at since November of 2022. So once again, we're moving up to those levels, and you can see that right now the current averages in the US, national averages are sitting at 381 per gallon, which is about the same time last year. Slightly higher than last year, but from a month ago, we are sitting slightly higher. Again, 380s is where we were. Right now, we're sitting at 381 and a half, and I wouldn't be surprised if this number starts to once again move back higher, because if you come over to retail gas, which is going to be this right here, so it's going to be tax US retail gasoline futures. They have also moved up since December of this year, up about 11%, and they moved up over 20% at one point. And I believe that this is going to start once again moving back higher. And from June, you'll notice that we were obviously down about 39-40%, which actually resulted in gas prices coming down, which of course benefited inflation. Now, US crude hits $85 a barrel as OPEC plus supply cuts tighten the market. So oil prices once again hit the highest level in months as crude supplies tighten, and of course oil prices have seemingly responded positively to the US labor market, which I didn't really understand why they would act positively on the back of US labor market reporting some decent numbers, perhaps as a signal that the interest rates may not rise any further and even fall sooner, which is better for the economic prospects of the economy over the medium term, says Craig Earlham, senior market analyst at Owanda. Now, this, I don't know how accurate that analysis is, because if anything, if oil prices go higher, that puts upwards pressure on inflation, which puts upwards pressure on interest rates. So is the Federal Reserve done raising interest rates? Well, only inflation can tell us. And will inflation be going higher or lower? Only oil prices can tell us. And right now, oil prices are going higher. So I don't kind of follow that logic that that oil prices have seemingly responded positively to the idea that the signal that interest rates may not rise any further and even may fall after seeing better than economic prospects of the economy. They'd already been on a good run though, and Brent is now trading around its highest level for the year with no shortage of momentum also. So crude oil prices surged over the summer as production curbs boosted the market at a time when demand is usually higher. So of course, summer prices, demand starts to go up a lot. But of course, there's Saudi Arabia also pushing for more cuts when it comes to supply and production, and that's really resulting in prices to see that upwards pressure at the moment. So considering OPEC's plus cautious, productive, and preemptive approach to achieving a stable oil market, the voluntary cut remain in place given the concerns about China's recovery. And the kingdom's crude exports stood at 5.47 million barrels per day in the first 27 days of August, the lowest level since April of 2021. And the Swiss lender said, quoting Petrologistics data, and also that we continue to think that Saudi Arabia will reduce the cut only when it believes the oil market is stable and enough to warrant it as well. So there is going to be some more potential cuts, at least up another 1 million barrel per day. Production cut has been forced for the last 2 months, and Riyadh has already said it will extend it into September, and it's possible that the extension goes into October as well, and will likely be accompanied by some oil export cut commitment by Russia as well. And of course, they could get up to over $90 per barrel, which obviously is not going to be great news for inflation. So this is, I think, a very, very important metric. And we certainly cannot sleep on the idea that crude oil can once again get up to over $93 a barrel. This is the entire analysis. And this week we basically saw a big breakout happen, and it was up over 7.5%. Like this week alone, crude oil is up 7.5%, and the next resistance and target that we're watching is going to be $90 to $93 per barrel for crude oil. And of course, if we continue to break to the upside, well, then pretty much triple digits is possible for crude oil once again. But this is most certainly going to put an impact on energy prices, gas prices, and inflation as well. You better believe it. This is going to put an impact on energy prices, and we've already seen that uptick from the previous report. So in the month of August, prices were up over 2.2%. In the month of September, we're already up close to 3%. And again, the last 4 consecutive months of green from crude oil, which is going to put some pressure on inflation. So let me know your thoughts down in the comment section below. What do you think? And again, if inflation continues to come in a little bit more hotter than expectations, and of course we see some acceleration in overall CPI prices, well, then guess what? There is going to be a higher likelihood of the Federal Reserve to raise interest rates even further, maybe another 25 basis points, which of course the market is not yet pricing in at the moment. They're expecting rates to be here at these levels, and of course expecting a lot of cuts going into 2024. 4 cuts priced in 2024. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. We'd love to have you on board. First week of the month is the best time to join. And of course, not to mention the fundamental technical analysis courses, as well as the options course, currently 50 to 60% off, and the bundle, which is the best value, 60% off, coupon code LABOR4, available until Monday night. As always, happy investing. I'll see you all in the next video.